there is no Bitcoin standard. So the time for you to worry is 50 years from now, when all the money in the world is Bitcoin, when Bitcoin is 450 trillion and it's worth, go figure, $50 million a coin, and then the currency of the country you live in is backed by Bitcoin, then you might see that what'll happen? The more likely thing is that currency, the whatever yo-yo dollar, will be pegged to Bitcoin, and then someone will take over the government and said, hey, we're going off the Bitcoin standard. But they're not going to get rid of Bitcoin.
As global markets shift and digital assets gain momentum, Bitcoin is in the spotlight, not just as a financial asset, but as a revolutionary store of value. Michael Saylor's latest interview with Mario Nawfal offers powerful insights into why he believes Bitcoin's price could be on the brink of an explosive rise, potentially to the moon. In the conversation, Saylor explores Bitcoin's unique role in a world where traditional investment avenues are facing challenges. Bitcoin's limited supply and decentralized nature make it an unparalleled hedge against inflation and economic uncertainty, drawing in major financial players and institutions. Unlike ever before, Bitcoin has evolved from a fringe experiment to a core component of institutional portfolios, fueling demand and adding layers of legitimacy. As governments and central banks adjust to economic shifts, Bitcoin is carving out its place as a reliable, non-governmental asset, a rare form of digital gold in a time of global uncertainty. For the first time, institutional investors have secure, regulated avenues to invest, bridging traditional finance with this booming digital asset class. Watch clips from the interview to hear Michael Saylor's perspectives on Bitcoin's trajectory and why now could be a critical moment to buy before the next major price surge. Don't forget to like, subscribe, and turn on notifications to stay updated on Bitcoin's journey to new highs. Thanks for joining us again. Enjoy the video.
Gold may be regulated, but it's also worth like $15 trillion, and Bitcoin is worth $1.3 trillion. So if we end up with the failure of gold, Bitcoin 10x's from here. So in terms of being regulated, it is regulated, right? The IRS regulated in 2014 by saying it's property. You have to pay tax on it when you sell it. And it's regulated via these ETFs. So if you're an institution and by charter you have to own securities via a regulated custodian or via a regulated bank, you're buying FBTC or you're buying IBIT. Just like the SEC just approved options trading, but only on IBIT. So there are regulations. The regulations solved the issue of custody. They solved the issue of compliance. And that's why these spot Bitcoin ETFs are the most successful ETFs in the history of Wall Street, right? Billions of dollars is stampeding into those instruments. Oftentimes what's going on is the regulated instruments, like IBIT is one, but so is MSTR. They're basically regulated securities trading on high volume stock exchanges in the United States. There's a lot of liquidity, a lot of traditional capital that can trade those instruments. That's why they buy them, sell them, and trade them. And so yeah, no one's saying it's not going to be regulated. In fact, it's the opposite, which is as it's regulated, it's the green light for traditional money and institutional money to enter the asset class. Well, I mean, that was the question people had in 2013. I mean, in fact, I thought that in 2013. I tweeted about it. If the government was going to crush it, like the IRS, doesn't designate stolen property or counterfeit money as property, right? If you were counterfeiting stuff, the IRS wouldn't give you a designation of property. So we lurched towards something clearly being legitimized in 2014, and then between 2014 and 2020, it was a question mark. But then in 2018 or so, you started seeing options on CME trading on Bitcoin, if you recall, and so that was another endorsement. And then when Fidelity entered with Fidelity Digital Assets, that was a third endorsement. When dozens and dozens of public companies started buying Bitcoin and were approved by the SEC to buy the Bitcoin and list, that was a fourth endorsement. then when you actually saw the last administration, you saw positive speeches and characterization of Bitcoin as a digital asset. In fact, Gary Gensler, Jerome Powell, Christine Lagarde, and Janet Yellen all acknowledged it to be a legitimate digital asset. They said Satoshi created something innovative and real. And by the way, they classified it as a speculative asset, but not as a currency. The real uncertainty around Bitcoin has been around its use as a digital currency, not as digital capital, right? If you're holding something and you want to do 10,000 transactions without any AML KYC at any size, now you're crossing over banking regulations and currency regulations, right? And that's highly controversial. But what's not controversial is whether institutions and individuals and corporations in the Western world can own property. So it's been acknowledged, like Berkshire Hathaway can own billions of dollars of Apple stock, right? Warren Buffett's not going to wire $1 billion of Apple stock to Africa without acknowledging that transaction publicly. So the use of Apple stock as currency would be controversial, but the use of Apple stock as property or capital, not so controversial.
Michael Saylor is sounding the alarm. Bitcoin's regulatory momentum could trigger explosive growth. With a market cap of about $1.3 trillion, Bitcoin still trails gold's $11.5 trillion valuation. But Saylor believes it could soar if it begins to replace or compete with gold as a primary store of value. Since 2014, the IRS has classified Bitcoin as property, making it taxable on sale. And now institutions have a regulated path to invest via products like ETFs, such as FBTC IBIT, approved by both the SEC and CFTC. This regulatory green light is unlocking institutional confidence and positioning Bitcoin ETFs among Wall Street's most successful assets, priming Bitcoin for massive institutional adoption. Saylor compares Bitcoin to owning valuable property, underscoring its status in regions with strong property rights like the US, Europe, and China, though it faces restrictions in countries like Cuba and North Korea. With mainstream acceptance skyrocketing, influential players like BlackRock are managing Bitcoin holdings, and the SEC and CFTC have even authorized options trading for Bitcoin. Yet, despite rising regulation, Bitcoin remains 95% decentralized outside of ETFs, preserving its secure, resilient structure for long-term gains. Let's go back to the interview and watch more clips to gain insights from Michael Saylor.
When you think of Bitcoin as, I own a building, right? Am I allowed to own a building? Well, the truth is you can own a building in China as well as in the United States or Europe. You know where you can't own a building? Cuba or North Korea. So where it's illegal to own property, then Bitcoin is in a regulatory gray zone for sure. But where it's legal to own property, yep. You're going to be able to own it. And I think we've crossed that chasm between 2020 and 2024. It's quite obvious, right? If BlackRock is handling the asset, if there's 100 public companies handling the asset, if the SEC is approving options trading on the asset, and if the CME trades commodity options approved by the CFTC, it's pretty obvious that the asset has been adopted and is supported by the regulators. So I think we're past that question. If you go to Bitcoin treasuries, you'll see that 95% of the Bitcoin isn't in these ETFs. 20 for every dollar of Bitcoin in the ETF, $19 is not in the ETF. So Bitcoin is already a global asset outside the control of any nation state or any company or any actor. And that's what makes it so special. And if you think of it as property, it's no more risky for a New Yorker to buy $100 million of Bitcoin than it is for a New Yorker to buy $100 million worth of warehouse space in Manhattan. Right? No one walks around New York saying, oh my God, the government's going to seize my warehouse space because they want to devalue the dollar. You're like, well, are you kidding? The government isn't backing the dollar on warehouse space in Manhattan. So it's just a piece of property that you're holding for long-term capital preservation. And where you're going to get yourself in trouble is if you don't pay taxes on your warehouse space in New York City, or if you want to transfer $100 million worth of Apple stock to somebody in Africa and you don't want to talk about who you sent it to, right? Right. But those are problems that people that have $900 trillion worth of assets have today already. We're not going to change the politics or the geopolitics of the world here. What we're doing is giving people a better investment than Google. That's the point.
Bitcoin's recent price action showcases its volatile potential for growth. On November 3, 2024, it dipped to $67,459 before rebounding to $68,466, only a 1.2% daily drop, but a 2.0% weekly gain. A 24-hour trading volume of $24.5 billion highlights the robust interest, especially from institutions anticipating a price surge. Many see Bitcoin's dips as entry points, with short-term volatility creating strategic opportunities for those ready to ride the wave. Also, upcoming events, like the US presidential election and the FOMC's decisions, could amplify Bitcoin's appeal as a hedge, particularly if economic stimulus measures weaken the dollar. Bitcoin's dominance at 59% reflects rising confidence as traders seek stability in top assets amid uncertainty. Although market volatility caused Bitcoin to dip temporarily, with analysts warning of a possible $66,000 level, institutional demand continues to surge. Companies like Strive Enterprises are launching Bitcoin-focused ventures, cementing its role as a mainstream asset ready to explode in the current financial climate. Do you think Bitcoin is set for explosive growth? Is decentralized finance the future, or will traditional institutions dominate? Share your thoughts in the comments, like this video, and don't forget to subscribe for more updates. Thanks for watching.